How bad was this Q2? Like everyone says, disastroso. Sell. Jim
Well,
Cramer says
the
sell.
perception is very bad.
Mm.
It's not different actually from the Q1. It's a revival from that. You know, after Q1, minus 20. I mean, here we got minus 15 and then minus 5.
Yeah.
What's really happening? Is the company going bankrupt? No, not at all. I mean, there is a slowdown, true, but I would say when things don't look great, you immediately start seeing the narratives. And in that situation, rather than panic sell like many people do, even YouTubers, you should.
Well, wait,
dig
whoa! The
two times,
YouTubers are the greatest thing that we have here, aren't they? They're our light. They're our source for information. If they're selling, there must be something.
yeah. I mean, it depends if you consider them a leading indicator or a contrarian indicator. I'm including also myself, ourselves in the basket. The problem is that when you are a creator, you tend to follow what is trending rather than spending the time in actually doing the analysis. And when something that seems bad happens, is the moment where you need to dig 100 times deeper rather than selling just before you can actually read the earnings report. Because, I mean, the second the results were out, the price was already minus 15%. So some must have been from the algos, but by looking at the reactions from some YouTubers, the comments on these videos on Twitter, a lot of people sold because disappointed.
Let me jump in a second, Arnie. Sorry to interrupt. Two things that I wanted to say is, one, I'm sure a lot of the reaction had to do only with the price movement. Because, for example, like we know the price movements are pretty, I'm going to call it random, right? Maybe random is not the right word, but it depends the environment and the timing because, you know, who knows, 12 months ago, the same earnings report could have made the price go up by 6%. Then would we have all had the story that Carp's arrogant, sham this, earnings this, government disaster, Cathy was right, all the rest of it? Would we have that?
That is always something.
First of all, there's always something, but it's like there was so much hate, and I'm wondering, I'm not accusing, I'm wondering, is it only because we saw minus 15 off the bat? Is that the only reason? Because, like I said, the macro environment could have made it go up 5%. Would that have changed? And also, we just saw like a crazy 30% gain in the stock price itself in the last month. So, like I'm saying, 4 or 5, 6 weeks ago, the price was at $8. We hit $9, $9.50. We were celebrating. Now we hit $9.50 and disaster sell as if the bomb went off. So
well, let's consider this thing. The business is growing slightly lower now, but is basically a compounding machine that keeps growing, pam, 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 pam. And almost, John, I would say gradually. Some quarters are stronger, so some quarters are weaker, but basically it's a compound machine. But if the prices goes pam, pam, that goes to people's mind.
yes.
And I would say, from what I see, many people have an average price of 20. So if after a spike, you see the price dropping again, you lose your hope. It's like, oh crap. The only moment where I felt, oh, come on, maybe I can recover, your hopes are demolished. That is tough, very tough, even if you are on the other side. Personally, I was up 40% on my position, and then boom, in 2 days, plus 10%.
On a position that is huge for you, is your largest position.
Yeah,
on your largest position, you had a huge gain the gain got cut in half. So
well, at peak it was 40% of a portfolio. Now obviously it has reduced because the price contracted. So it was a big hit, but the question is, what do we really know? The company is doing great, is doing less good than previously, probably less good than what we expected. Is the company going bankrupt? No. The key performance indicators are performing well. Oh yes, they're performing well. What are those? The client acquisition, okay, maybe slower this quarter, but as we noticed in Q1, actually it was a spike. So from what we know, maybe they contracted a lot of customers just with days before the closing of the Q1. If they waited a couple of days, those clients would have been reported in Q2. So that's why every quarter is important, but you need to detach, see things with an holistic picture. Also, the net dollar retention, do you remember, right? We said the real net dollar retention for the government is 140. That is great. Probably is even too much compared with what we had previously. So we need to understand, okay, is it a spike or a new trend? And if you look the numbers, if you reverse engineer the net dollar retention, everyone is scared now because 119%, which is lower than 125% as of Q1. Yes, but it's the same dynamic we had in Q1. You have the government, which grew very little compared with its past. And if the government grows 13%, that means that the maximum net dollar retention you could have is that 13%, because the revenue from a period is basically the sum of the net dollar retention, which means how much expanded the same clients, plus the revenues from new clients, which even also how I shared in the last article, the contribution of the clients when they are just acquired is very, very little. Less than 10% of the revenues from each year come from customers acquired in the year. So the net dollar retention is the key metric. So if the revenues expanded overall 13%, it means that the highest net dollar retention possible was 113%. If the group is 120, let's approximate, it means that the commercial side was at least 126, 27, whatever. Which, how it is, not great like Q1, I would say is good. I mean, my crucial point is to keep growing the commercial side by more than 20-30%. You need to have the net dollar retention that stays at least that 20-25, so that the combination of net dollar retention 20-25 plus the revenues from new clients, so 5-10%, make you grow more than 30%. And I loved how everyone was complaining last year because the commercial side was not growing enough. Now it is taking more speed. People are selling because the government slowed down. I mean, are you joking with yourself?
Let me jump in here, because that's those are two things. One is like, okay, they're picking on certain items, whatever it be. The last few quarters that I've witnessed, I've seen them picking on a few items. Fine, I guess any criticism is reasonable, justifiable, and worth an answer. But like, even I heard one criticism about the top 20 clients increasing their revenue, and that the company's too dependent on the top 20. If I'm not mistaken, I'm pretty sure I saw that. But if it was the other way around, so I'm not saying that criticism is invalid, but if it was the other way around, they would still be criticizing. They would say, oh, look, they're losing spend or revenue growth with the top 20 clients. They're losing the attraction of their top 20. But now we have more of the top 20.
You need too many clients to grow.
they're reducing all the top 20 are minimizing their spend with Palantir. This is bad. But now if we're increasing the spend with the top 20, it's like now we're blaming it on that. Oh, they're too dependent on their top 20. Another thing I wanted to say, just what we spoke about in the past, maybe what's up with the sentiment that we've been seeing on the socials is that, and I include myself 100% in this, Arnie. In 2020, I think my mind is still fixated from my experience with Tesla and the Bitcoin in particular, and basically any other stocks, is that we were so accustomed in that 1 year, especially 2020, to see things skyrocket all the time. 7% per day, 10%, 15% after earnings, on mediocre news. Like if this was in 2020, we would have had a 20% gain. So I feel like we're really accustomed to that, myself included, and I feel like everyone. So maybe we just really got strongly brainwashed in that 2020 period.
Yes, if you ever invested long enough, you know that being down for some months without something really happening, you see your position dying is actually part of the process.
Yeah, exactly.
It happened sometimes, especially when I was investing only in Italian stocks, because Italian stocks are not that attractive to institutional investors and in general to people. So when there is a trend, the narrative is not in your favor, you really see this perpetual, oh, the Italian market is down due to the Italian banks. Oh, the inflation kills the Italian banks, therefore all the Italian market. Whatever bad things happen in the world, the Italian stocks are down. So maybe I got used to that. Many people are quite new to investing, so they have this wrong perspective perspective that everything just goes fine and fast. And I would say they tend to put attention to the wrong things, because you can clearly see here with Palantir, every quarter, since it's heavily followed by YouTubers and so on, every quarter seems like the life of or death of the company. I mean, to be really clear, until I was really digging into the financials like I'm doing with Palantir, for many companies I was invested in the last years, just looking at the earnings release, to second, okay, the company is still growing, nothing really important to see go on. Because in reality, well, for this kind of companies, you want to track actually they are executing well. But the reality is that you could be an outstanding investor just by looking at the fiscal year numbers. Obviously, this is more true for companies with an established past. It is more difficult for companies like Palantir, where actually we still learn how things go. Do you remember when we spoke about the perception of, okay, big contracts, we see a spike, we go to the moon. No, it doesn't go like that. For instance, I understood this morning a crucial thing that I was not aware of, the Forex impact. Because I was studying the hypothesis that the slowdown of everything was due to the Forex impact, because since they have 40% of the revenues coming from outside the US and the dollar appreciated a lot, the revenues coming from outside the US are just worth less, and that creates a negative impact on the financials. That happened to ServiceNow, which means that they grew realistically 30%, but since 40% of the revenues were devaluated from currency impact by 10%, the real growth they had to report in dollars was 25%. So I was studying this, could have happened to Palantir too, because the same breakdown, 60-40. And I saw one line of the income statement, the earnings, the 10Q, saying our contracts are mostly denominated in dollars. So that is the reason why we don't see the variation currency, constant currency variation like for ServiceNow. And that is important to consider, because it means for an European customer right now, if they come and ask a contract in dollar, for me is much more expensive, because I'm a company that operates in euro, and these guys come and pretend to buy their software in dollars. That is very expensive to me. And also from a reporting point of view, so our point of view as analysts, it is a very important distinction to know, because it means that Forex movements don't really affect the revenues, which means if there is something that is bad or seems bad, that is not a cause for bad disappointment. You need to dig deeper. So that's why I went straight to say, okay, the slowdown is not really to Forex. There was the dynamic of the government. Let's see if the government slowed down for the same reasons it slowed down in Q1. And it's exactly the same. The budgets were enacted very late at the end of Q1, the budgets of the Department of Defense, which is one of the key clients for Palantir. is the biggest client of the government part. So what happened? Also, all the defense contractors had a slowdown in revenues. Actually, apart from Raytheon, all the other contractors had a negative growth, both in Q1 and Q2. What does this say? If all the sector goes in negative territory by 5-10%, while Palantir actually grows 13%, which seemed very bad. I mean, yeah, what was that 13%? That 13% becomes actually very valuable, because it means even in a period where people competing for the same kind of budgets were slowing down, you grew. And if you think of it, it's the same dynamic of Intel. When everything goes fine, everyone grows. But if you can grow when the market turns against you, which is in this period where you see Intel doing very, very bad, but AMD is actually taking market share, is growing, that is a huge sign of strength. So that 13% is awful if you look at it and you don't dig deeper. If you contextualize that, you have another info.
Maybe a great info, maybe a strong info. Arnie, let me ask you this, because I don't have enough time experience in the markets to understand. I've never followed a company for numerous years in terms of exponential growth. So I don't know which companies you know in exponential growth, if it's Tesla or others, but even let's say Tesla, for example, 7-8 years ago, I would doubt that their exponential growth never had a minor dip in it before it took off to explode. And now if I remember the charts of even Salesforce or ServiceNow, which we reference often as competitors or similar businesses to Palantir.
Comparable more than competitors.
Yeah, comparable. They took off, but after certain years. So there was numerous years where it was more or less flatlining. So I'm sure stock price and NDR or client acquisition didn't always exponentially grow quarter over quarter. So what I'm feeling a lot of the pain is from our friends and the fellow social mediaists is that they wanted exponential, every single number better than everything quarter over quarter. But I'm wondering if that's the story for everybody. I would bet that Tesla had a minor dip. It wasn't constantly better and better. Am I wrong? Do you know?
Absolutely.
Do you have any examples?
I mean, well, we can speak about the examples you said. Tesla has not always been smooth. For instance, they had very, very major problems with Model 3. Let's talk here about ServiceNow and Salesforce. They actually always grew, but the pace at which they grew is not always the same, because there are 100 reasons for which a business can have a headwind, tailwind. I mean, for instance, before we said the Forex impact for ServiceNow, that is really relevant if the dollar appreciates and keeps appreciating for many quarters. There are things like COVID, which you can't really foresee. So even the best compounding machines, for instance, I was invested in a company called Amadeus after the pandemic hit, because this company doing IT for airlines was very, very beaten. And that was a compounding machine. They keep growing very steadily, their 20-30%, but then COVID hit. For every sector, there is a potential thing that makes things go bad for a certain period of time. That is why you need to really, I wouldn't say fall in love, but you really have to trust the management, see what they're doing. If you're not aligned, nothing wrong. Probably if you're not passionate about the CEO, it's not the right company for you. I mean, there are so many companies and you have a limited amount of time that it's worthless to be invested in something you think the CEO is an idiot.
Yeah, exactly. I was just touching on the CEO since you brought him up. I said it on the live with Adam. You know, politically, I think I'm at the opposite or far end of the spectrum from Carp, but on his personality, I relate to him. I like him. I really appreciate his tone. I don't find it arrogant. That's just me. Maybe I'm very similar to him, but that's it. Just to say, I like the CEO. CEO, I haven't spoken of greatly, but that's just my opinion. I just find it like other people have said, he's too robotic. And so Carp is in. I'm in for now. I still appreciate. I'm still rooting here. And what do you think, Arnie? What's your take? I haven't heard you too much on Carp or Shyam. Do you have any criticisms or praise for either or?
Well, Shyam, I think he's gradually improving. I like him as an operative person. He's not ready to be CEO yet, despite I see many are pushing, oh yes, Carp should be fired, Carp should leave. I actually think the other way around. I mean, I would give full power to Carp right now. I mean, he has full power, but that is the kind of person I want to see. The person that doesn't give an F of Wall Street, but does the things that he believes are great for the company. He cares of the company, not the stock price. If you are not aligned with his vision, you will have a tough time. And I would say, what I really appreciate is that it seems to me that kind of person that is transparent. The fact that he gets angry, goes against Wall Street. He doesn't, he's not scared of saying analysts are idiots. that for me is a signal, because my favorite investor, Tamburi, is the only professional investor who during the interviews was saying, okay guys, I mean, one day the market is down because the oil is going up. The day after, the market is down because the oil is going down. I mean, you're kidding me.
Yeah, exactly. Let me jump in there. Let me jump. Exactly, because that's what I left the message when I left you the message this morning. The same thing with the inflation data. This market is ridiculous. It comes out 8.5%. Okay, less than last month, whatever, how manipulated these numbers are in the first place. But it's like now champagne, 8.5% inflation. We're all rich again. But it's just the up and downs on illogical things are exactly that. So that's why I appreciate Carp's tone and anybody else that sees like that too. And another thing, the Wall Street guys or whoever's making the price go minus 15 in the pre-market, how do they know? Look how much time it took you to analyze and dig deep. But these guys on the instant, the press release come out and 60 seconds later, they made their decision to sell hundreds of thousands of dollars of stock.
No, I believe that there is a lot of algo-driven things right now. We saw that with many stocks. Especially those stocks that have marketable securities, because the fact that analysts can hardly say exactly what the impact of a marketable security is, combined with the operations, make a lot of variability into the EPS numbers. So I'm sure that I haven't seen firsthand anything, but I mean, the movements are clear that it is algo-driven. As soon as they read a guidance that is lower than something, they immediately sell. And then once the price goes down massively in short time, you see that people immediately react. Because I'm sure 100% that if the price did like minus 2%, minus 3%, you would not see all this criticism on the company. I'm sure.
Exactly. Yeah, 100%. And back to just Carp to finish off that thought. We were talking about Carp. So I love his personality. I read him. I think we would probably be friends. But I wonder if, because I question everything, is he like just doing this act to get people like me on board and be like, hey, conspiracy guys that don't, I don't know, that have this FU attitude, like come on my plane. But I take it as legit. I feel like he's legit. But I was just wondering, is he like luring me in?
I would say if he didn't get angry, he would have probably been. I like when people get hungry, because if people get hungry in a situation where you would normally not do that, it means that you want to be transparent.
Yeah,
I see Carp wanting to be transparent, to say things how really they are, but he's constrained by the lawyers. By the fact that,
when he was banging the table, Arnie, He was like this. He had handcuffs when he was banging the table and he was talking. They put him in handcuffs with the straight jacket too. And I would call it passion. I wouldn't even say angry for me because like I said, I feel like I have the same personality too.
Triggered,
And as Italians, I don't know if it's part of our culture, but at least here, the Canadian Italians, we're known for this aggressivity when we talk, but it's all love. It's just passion. I just tweeted out two things. I quoted Karp. I was listening to the call again. So first, he said, "We will preserve our culture. We will do this our way. A very long-term focus. Do not expect us to be like others. We will make aspirational goals." This is like a model for life, Do it my way, the right way. Okay, we have to adjust along the way. I think he even said that later. Long-term focus. I don't want to be like others and make high goals. Then my second tweet, again from Karp, "We run this company as owners. We don't run it purely to make people happy quarter over quarter. I don't pay attention to that." He said, "I'm looking 2 years out." For me, these two tweets that I just did, this is exactly what I want to hear. That's why it's so beautiful to me. It's like music to my ears. I'm like, man, he's like just speaking to me. Is he trying to suck me in? But I love his attitude.
There is nothing that should scare you more than management that is only focused on praising and making Wall Street happy. Because if they make Wall Street happy, it would mean they pursue short-term goals rather than focusing on the real long-term. I mean, speaking long-term is always weird because what's the long-term? Here, I would say the focus is not focus on quarterly numbers too much. Focus on the trajectory. It's not that a weaker quarter makes the company worth nothing, neither the company worth 3x it. So I love when people get triggered because I see Karp wanting to be more transparent than he's allowed to. I like they reiterate we are focused on the long term, but not only they say that, they show that with their decisions, they don't really care too much on what analysts think of them. They showed that many times.
Yeah.
And I believe Karp is the right personality. For sure, something more and something better must have been done. But looking again at the key things, the thesis is, during a recession, this company doesn't collapse.
Exactly.
Is it true? I would say absolutely true. Even during a recession and a war, this company grows. That is true. They said, we are willing to invest heavily in the US commercial. They said that in Q4. How they are performing there? Very, very well. This means where they putting the resources, they are delivering. Still, something more can be done. I see a good trajectory. When I see the management saying, we are pursuing this way, and they actually go there, for me, is a good sign.
Exactly. They're huge contracts, like I even heard Karp repeat it in the call. We're talking about multi-million-dollar contracts. So I was compared to myself quarter over quarter. Okay, 3 months time. How much better am I in X item in 3 months time? 3 months is not a lot. Like, am I that much better in anything in 3 months? Yeah, I'm getting slightly better, but to think that I'm going to be exponential every 3 months in my writing, in my running, in my reading, as a father, and the rest of it, 3 months. What do you want to judge me as? Even as an employee, when you're working, like, are you 10 times better in 3 months? No, I'm not 10 times better. I'm on my path.
The crucial question to ask is, has this company in this quarter built a bigger moat or destroyed its moat? This is something actually I realized from Thomas Chua, who's very active on Twitter. Many investors focus on moat. Moat is that I don't know the word, but that thing that protects you from competitors. And the bigger the moat, the more you can have strong earnings with high margins protected from competitors. So basically, the bigger the moat, the more difficult it is for someone to copy you and steal your profits. The key idea is when you invest, you don't really want to have a company with big moat. You want a company that every day makes its moat bigger. That is 100 times more important. The idea is that Intel has still a big moat, but rather than improving its moat, is actually destroying it. So what happens if a big competitor comes, let's read AMD, that small competitor is able to capture growing and more shares of the pie. And that becomes a huge risk. So a company is good only if it keeps increasing its moat day by day.